Good morning, everybody. This is Laura Peterson, your host of Central Florida Real Estate Radio. I'm from Your Home Sold, Guaranteed Realty, and to discuss the sale of your home, you can call or text 407-566-2555. That's 407-566-2555. So I always have lots of great stuff to go over with you guys today, and I'm going to start with the stats and everything, but I just wanted to go into a little bit of my perspective on the market and where it comes from and all of that kind of good stuff. I've been doing this show for, I don't know how long it's been. Actually, I should go back and figure it out, but over 10 years. I actually started doing it on the radio, and now we're just doing a podcast. But that started well over 10 years ago, I know for sure, in regards to, what we were doing and how we were doing it and all that kind of good stuff. I got my real estate license in 2005, and I've watched this market go through many cycles and many different situations. In late 2005 and 6, the sales started to freeze. Before that, they were going along like gangbusters, and everything kind of that went on the market was going pretty quickly. We were actually in a place where the market was increasing about 5% a month. So it was crazy. I remember I was fairly new to real estate, and I just said to people that I was working with, I'm like, this cannot sustain itself. You can't have a market where it goes up 5% a month and not expect that things are going to change, because it's going to get to a point where it was unaffordable. And it certainly did. And so in the fall of 2005, early 2006, the market kind of froze. People just came and they said, I'm not going to pay that for that, is basically what it was. It wasn't necessarily that house or another house or anything like that. They were all too high. And so they froze, and then they started falling slightly, and then they just continued to fall. We had the 2008 debacle and everything like that added to the situation, and it hit bottom actually in about April of 2010 was my estimation. I remember going and showing a house that had never been lived in. It was a couple of years old by that point. The people that had bought it had lived in England and never lived in it. It was bank owned, and they had bought it for, I don't know, $250,000, $300,000. It was in Poinciana, and it was on the market for $50,000. So this is a brand new 3-bedroom, 2-bath home, 2-car garage, ranch style home, on a decent lot and everything like that was on the market for $50,000. And I went, again, how low can it go? It can't go much lower than this. This was crazy. They couldn't build it for that point, for that amount of money. So what had happened is that's when a lot of builders went out of the market and everything as well. And what happened as a result of that is that the inventory started to get tighter because there were more people still continuing to move to Florida. The prices were really good, and so it was a good buy for people. So there was a good market and everything out there. And but the market didn't go crazy. It just came up slowly. It didn't come up crazy. It just kept going slowly, like maybe 5%, 7%, 8% a year, somewhere in that range, that it just kept going up little by little. And then the pandemic hit. And so from 2010 to when the pandemic hit, it just went up a little bit at a time. And it really wasn't even when the pandemic was going on in 2020 that anything happened. But the interest rates, as you may remember, were ridiculously low. I remember when they first went like in the 4s, I had people call me and they would tell me that, and they were anonymous. I didn't know who they were. They were calling me from the radio, and they were saying, these interest rates aren't going to last. They're going to go down and stuff like that, or they're going to go up. And I said, well, I don't have a crystal ball. I don't know. I don't really see what's going on, but to me, it looks like they're going to stay here for a while. And they did until probably 21, 22. I don't remember exactly when it was, but when the pandemic was over, the interest rates were really low. The market decided to go crazy. So it was an increase and getting things kind of, back up and all of that kind of good stuff in regards to what was going on. So it didn't last real long, maybe probably about 6 months when the market was going up. And I remember meeting with sellers and I would say to them, hey, I would say, well, this is what it looks like your houses are selling for in the neighborhood. And they would say, but I want to get 10,000 or 20,000 more. And I would say, okay, well, in this market, I can't fight you. I'd say, hey, let's try it. And so we would try it and we would probably get 20, 30,000 above that asking price. So the market was going up really, really high. Then the interest rates went up. So they went from 3 to 6 to 7, and they've kind of hovered in that 6 to 7 range for the last several years. And when they went up there, it's like the market kind of froze a little bit. It didn't really freeze. It just went down in the number of properties that were selling on a monthly basis. It was cut in half. And I'm sure that you can imagine if someone had bought their house and they have a 3% interest rate on it, and it was like, well, maybe it would be nice to move, but I don't really have to. If they're going to go into a house that's 6% interest instead of 3% interest, that's a big jump. That's a big commitment, and maybe they qualify for it and maybe they don't. So the number of houses that sold went in half because it wasn't maybe it would be nice and I'll be trading one thing for another. Now it's kind of, okay, well, if I have to move because I need a bigger house or I need to downsize or whatever the situation is, that's really kind of what happened next in regards to what happened. So the number of properties selling decreased, but the prices didn't decrease. And so the interesting thing is that we have kind of just stayed there ever since. So our market has increased a little bit, like 0.5% a month, maybe a 0.25% year over year. It's like 3 to 5% that is considered kind of normal for real estate to do. So that has kind of happened month after month in regards to what happened, in the last few years and all of that. And some neighborhoods have gone up, some neighborhoods have gone down. So what I've noticed is that if you're in the far out fringes, that people thought, hey, I'll buy a new house way out here that's going to take me an hour and a half commute. It's not going to be a big deal. And then they got in that house and it was a big deal. So they were willing to pay more money to move closer to their job, closer to their family, closer to their church, whatever it was, wherever they wanted to be close to, instead of having those big commutes. So those houses that are out there a little bit are a little bit lower today. And the ones that are closer to where they wanted to be, again, the location, they actually are what, those houses have gone up a little, not a lot, but they've gone up a little. And probably the biggest thing that I have found over the last few years is that sellers are still of that mindset that my house is worth more money. And so the hardest job that I have is actually not the hardest job, but one of the hard things that I have to do is actually talk with the sellers and let them know the real deal in regards to their home. And, they might still choose to do something else with it. But basically the bottom line is that we cannot change the market. We can only operate optimally within it. And that's what I do day in and day out. And what I try to do to make sure that everything is working the way that it should and doing what it should in order to make a difference out there for the buyers and sellers. And you're going to get the most money. It's going to come to the market. So, but we can, and it's like maybe you've spent 50, 60, 70, 80,000 on your house, but it still has to appraise in most cases because most people are getting loans. And so when they're getting a loan, the bank is the one who is the amount they're going to give is based on the appraisal. So if the house doesn't appraise, the buyer's usually not sitting there with an extra 20, 30, 40,000 that they can give to it. So the bank kind of determines the price in many of these cases with people getting loans that don't have that money. Now, obviously, if there are cash buyers out there and they can pay whatever they want, well, that's obviously ideal. But guess what? The people that have cash, they're not interested in paying more money than the properties are worth. They're just interested in paying what it's worth or getting a deal, and think they should get a deal. And sometimes they do get a deal with paying cash. Sometimes they don't, because to the seller, it's cash either way. If they've got a loan that somebody's getting on that, or if somebody's paying cash. And usually, like I said, the cash guy isn't going to come in there uneducated and pay more than the market is. So pricing is critical in regards to everything that we're going through. I've been through all the markets. I've been through all of the systems in regards to what you need to do in order to get that home sold, and what you need to do to to make it happen quickly. It's like taking a Band-Aid off. Do you want to do it fast, or do you want to do it slow? And basically, when it comes down to it, many times and most times, and I'm going to say 99.999 times, the house comes in at market value. So you've got to be realistic in knowing about that in this market and know what's going on. So anyway, I was going to get to the stats in this segment, but obviously I didn't, so I'll get to them in the next one in regards to what's going on now and what's locally happening. But I just wanted to give you that little bit of an update. So in order to get in touch with us, you can call or text 407-566-2555. You can reach us online at centralfloridarealestateradio.com, and I will see you after the break. Welcome back, everybody. This is Laura Peterson, your host of Central Florida Real Estate Radio. I'm from Your Home Sold, Guaranteed Realty, and to discuss the sale of your home, you can call or text 407-566-2555. That's 407-566-2555. So looking over everything and seeing what's going on in the market this week, I kind of gave you a little bit of background on me and everything like that in the last segment, but going over specifically what's happening in Central Florida. So when I'm looking at these stats, I've decided to put them together myself. I used to get them from the real estate boards. They've changed what they're doing in regards to the stats. They don't give me what I'm looking for. And so for the last couple months, I've been going ahead and calculating the stats myself with the help of AI, uploading, putting everything in there, and then it helps me kind of put it together a little bit. But basically, when it comes down to it, I'm looking at what's going on. I'm monitoring the trends because I like to see what's going on. So, like I mentioned in the last segment, I've kind of been through the ringer over the last 20 years, 21 years that I've now had my license and been selling real estate. And I've consistently watched the market to see what's going on, to be ahead of the trends for either buyers or sellers, so that you know how to go into the market and what to do with it. And so basically, in looking at what's going on right now, breaking it down, we're looking at the 5 counties of Orange, Osceola, Seminole, Polk, and Lake counties are the 5 counties that we look at on a weekly basis. And the single family homes, I'm going to look at that right now. That's $408,000 is the median price. So that kind of gives you an idea. And so when people are saying, hey, I want a house for 150, guess what? With the median price being 408, it's probably going to need a little bit of work, right? And so I'm not saying there aren't those out there, because they are, but they probably do need a little bit of work. And so, last week the median price was 405, so it's staying pretty consistent in regards to where we are. The condos and townhomes, they're at 276.5, and last week it was at 275. So it's 1,500 higher this week, which really, again, doesn't really mean anything. We're only looking at a week's worth of data at a time. When I give the monthly reports, they're not broken down between single family homes and condos and townhouses. they are just all glommed together. So when you hear it on the news and they say, hey, the median price is like 385, okay, but that's everything glommed together. And you've got to really look at the individual segments. And like I say all the time, not just we'd probably have to break it down by county. We break it down by zip code, school zone, your subdivision and all that kind of thing to really see where we're at. So the gap between the single family homes and the condos, the median price is about $130,000. So somebody that's on a budget or just starting out, maybe they want to start in a condo. I know that's what I did. I mean, obviously it was in a different city. I was living in Chicago at the time, and I lived in a high rise on Lake Michigan. And that was great. I mean, that was what I wanted to do, and not have the maintenance and all that kind of good stuff. But, I think a condo is a great place for people to start. You don't have as much maintenance. You still have maintenance of inside your unit, but you don't have necessarily all of the big things that you would have with a home. And so there's 130,000 difference in regards to that. So affordability becomes a lot greater in regards to that. For single family homes, like I said, it's 408,000 was the median price. There are 14,065 active listings. The closings this week is 759. So that breaks down to about 4.28 months of inventory. Now, a normal inventory is considered between 4 and 6 months. So what that does is it gives people choices, but it's not so much inventory for a seller that they're going to have a really hard time selling their house. Now, the interesting thing when you're looking at under 250, there were 799 active and there were 61 sold. And so that was 3.02 months of inventory with 95% sale to list price ratio. From 250 to 300, there are 1,294 active, 87 sold, and 3.44 months of inventory at 98% of asking is the selling price. Between 300,000 and 400,000, which is really close to our median, there are 3,833 active, but 215 sold for 4.12 months of inventory, and the sale to list price ratio is at 99%. Between 400 and 500, there are 2,782 active, 163 sold, 3.9 months of inventory, and 99% of sale to list price ratio. And then between 500 and a million, 4,126 active, 194 sold, 4.91 months of inventory, and the sale to list price is 99%. When we go over a million, we have 1,231 active, 39 sold, so that gives us 7.29 months of inventory, and the list to sale price ratio is at 95%. So on both ends, really interesting, under 250 and over a million at 95% of asking. All the others are at 98 or 99. So basically, if you're in that middle category, what I always let people know is that, they're always like, I want to have a negotiating room and stuff like that. Okay, so if you're looking at a $400,000 house, that you're right there at the median. So 99% of asking is $4,000. So that means that your price to what you're going to get an offer on is the difference of only $4,000. So that's not a lot. So if you're 10 or 20,000 off, you're usually not going to get very many sales or lookings at your property, and that's the problem, right? If you're under 250, you can be a little bit off because that's 5%. So if you're at, say, 200,000 and 5 times 2, that's $10,000 that you can be off on that $200,000 house. So again, not a whole lot in regards to what you can do in regards to the list to ask price ratio. So it's like I'm always, trying to talk to sellers and let them know that really it's in their best interest to be as close to the market as possible. Because when the houses are selling at 99% of asking price, that means that the listing price has to be at that asking price. Now, unfortunately, I don't have the beginning price of what a lot of these people started asking. These are only the prices that actually sold, right? And so I would have to dig really deep, and it would be almost impossible for me to do that on the number of properties that sold. Of the 700 that sold, I'd have to go into each one and write down what their original asking price was and then do some calculations. And so, with the access and the things that I have, it's the final list to ask price ratio is what we're getting here. So it's really, really important for sellers to know that. And I just had a call with the seller yesterday that I'll tell you about after the break. But in order to get in touch with us, you can call or text 407-566-2555. You can find us online at centralfloridarealestateradio.com, and we'll see you after the break. Welcome back, everybody. This is Laura Peterson, your host of Central Florida Real Estate Radio. I'm from Your Home Sold, Guaranteed Realty. And to discuss the sale of your home, you can call or text 407-566-2555. That's 407-566-2555. So I was in the middle of the stats, and I was talking about that list to ask price ratio, and that, from 250,000 on the single family homes to $1 million, it's 98 or 99% is the list to ask price ratio. And so basically that's a big number for people to know that if you're going to sell your home and you're in that price range, you've got to be close to the market value, because if you're not going to get showings. And I was telling you how I was talking to a seller just yesterday, and basically the bottom line is that, we have been going back and forth and all of that kind of thing. He's had his house on the market for a little bit of time because he wanted to try a higher price. And, he lives in another state, and so it really doesn't make sense for him to hang on to this house because he's decided to let it go. He's got his carrying costs and all of those kinds of things that come into it. Not that it's a lot. He owns it outright. He's, got a little bit of an HOA payment. He's got taxes, and then obviously any maintenance that might happen. But he's got another home for this money, and and really just sitting there on the market is not necessarily going to do you any good. One of my pet peeves is actually that the days on market are counted for houses. I don't believe days on market are counted for any other item out there. If you go into a store and you see a jacket, for example, it doesn't say how many days it's been sitting there, that nobody's been buying it, or if it's brand new to the store or whatever. Cars really don't have that. Hey, this car's been sitting on the lot for like 6 months. Hey, is there something wrong with it? And that's always the question that people ask, but it's not really the right question to ask. It's did the seller have the price too high? And now they've just come down to reality and realizing that this is really the value. Depending on the market, depends on if you can overprice it or try something different. But this market is not that. And so anyway, we had this discussion, and he was looking at other properties that are on the market that are, comparable properties to his. And we were looking at the ones that have sold. And basically the ones that have sold are extremely close to the asking price. To the price. And, all of the ones that he was comparing them to were 10, 20, 30,000 above what the ones that sold for. And so then, it's like you go, gosh, I wonder why it's sitting here. And that's absolutely right. I had another talk with another agent this week with a buyer that I was working with. And she, we're looking at putting a backup offer on this house because it's something that the people want. And I said, well, it looks like you priced it really well. She said, yeah, we got full price. And she said it was difficult in doing that, but she said she got the seller to do that. And it did sell within a couple of weeks because they did have the price price right. And so, it comes down to that you really, really need to consider that as a seller. Now, as a buyer, that it depends on what you want to do. I'm not a big firm person that you should look above what you can afford for sure. And I've had buyers like that they can afford, like say they can afford 450 and they're like, I want to look at this house at like 600. No, you're not going to get that $600,000 house for 400. But if it really is worth 400 and maybe it's at 450 or 475, we could potentially look at it and make a lowball offer. But many times the seller is just going to be upset with that. You're going to be upset you're not getting the house. So what most people do is they do that least common denominator, right? Is that they're looking for the houses that are in that price range, what they want to pay. And then they go accordingly. And if they find something that's wrong with it, maybe they can negotiate it down and all of that kind of stuff. But it comes out that you're actually going to be looking at, at the homes that you can afford. Because if you're looking for homes that you can't afford, it just never ends well, because you think, gosh, it'd be great if I could, if they would come down $10,000 or whatever. But based on the stats, most sellers aren't going to do that. They're going to, decide that on their own. And honestly, I learned this back in like 2008, 9, 10, that kind of area when all of the bank owns and everything were on the market. So, like I said earlier in the show, that the market kind of froze in 2006 or late 2005. And I remember talking to one seller that I had. It was a condo, and she had paid $700,000 for this condo. And I told her, I said, the market is frozen. And when you look at it, it looks like it, to me, my impression is it's going to fall, because it had already been frozen for several months. Nothing was happening. People just thought the prices were too high. And so I said, you can either follow the market or you can lead the market. Because if you follow the market and you just look at everybody around you and they're going down 10,000 and so you go down 10,000 and everything too, then you're just going to be a race to the bottom to see, just kind of going along with the flow. Or if you lead the market and maybe you go 10,000 lower than anybody else right now, you could maybe sell that home. And you could, and it was actually a condo, but I said you could go ahead and you could sell that condo now and not follow the market, be out of it, take your losses and move on. So she sold that. She bought that house for $700,000. The market had started to fall, but fall slightly. She ended up selling that property for $660,000. Okay, so there was a $40,000 loss, which was not good for anybody. I hadn't sold her that $700,000 house in the first place. I just helped her get out of that situation. But do you know that that condo went down to $120,000? It's from $700,000 to $120,000. Now the condos took a much bigger hit than the single family homes did, but it took that big of a hit if she would have hung on to it and taken it down to the bottom. So she was more than happy that she took that $40,000 hit and didn't race it all the way down to the bottom. So, basically the bottom line is, though, the reason that 2008 is where they really started to tumble, because when people got in a position where they couldn't pay the mortgage and that kind of stuff, it was not quick that the banks took to actually take those homes over. So most of them came on the bank's books in probably 2008. If they started to default in 2006 and 7, it was 2008, 9, 10 when the bank started to take them over. It was a very, very long, arduous process. So there is some legislation that has happened since then, and the mortgages today would not take that long to foreclose on in Florida, but at that time they did. And so basically, it comes down to it that you really have to be smart in looking at the market and where it's going. So like I said, that's why I look at it every week. I look for the trends. I look to see what's going on, to see if the market's going up, if it's going down, if it's staying stable. But again, I'm just looking at a week at a time. So I have to look at the trends and see where it's going. But the trends are still very consistent, that it goes up maybe 10, 20,000 this week, down 10, 20,000 next week, maybe a $20 to $50,000 spread in regards to where it's going. But basically, like I said, our market is very consistent. Everybody predicts that if the interest rates go down, then the market will pick up. And I believe that some of that will happen too, because more people will be able to afford some of these homes that are sitting out there. And so, it's a big, there's a lot of variables and a lot of things that come into play here. And so that's kind of what's going on and how it happens. So I've just talked about single family homes so far and everything like that. But basically, when it comes down to it, I'm just today talking a lot about the market, what's happening, how you optimally go in about it and make things happen. So in order to get in touch with us, you can call or text 407-566-2555. You can find us online at centralfloridarealestateradio.com, and we'll see you after the break. Welcome back, everybody. This is Laura Peterson, your host of Central Florida Real Estate Radio. I'm from Your Home Sold, Guaranteed Realty, and to discuss the sale of your home, you can call or text 407-566-2555. That's 407-566-2555. So I wanted to continue with the stats in regards to, I usually get this done in the first segment. I didn't even get to it in the first segment, but I've really just been talking a lot about the market today and what's going on and, kind of how you need to look at it. So if a house has been sitting on the market for a while and it hasn't had any price reductions, maybe to stir up the seller and everything like that, it doesn't hurt for you to make an offer. Now, the sellers are probably getting offers all the time from lowball people saying, hey, I'll give you like 75 cents on the dollar. And they're not necessarily going to do that. But if you are in the price range, they're going to, counter you or think about it or whatever. And some are going to be reasonable and some aren't. But until you try, you don't know what their motivation is. You don't know what they want to do, all of that kind of thing. And so basically, let's look at the condos and townhomes right now and give you a little picture on that. And then I've got some other comments that I think will be really good in regards to, what the best way to navigate this market. So there's 5,090 on the market, 173 sold. So that's months of inventory is 6.8. So slightly above, our 4 to 6 months of inventory. Last week was at 7.38. So, it's kind of staying right in there. Under 250, there are 6.84 months of inventory, and sales to list price ratio is 96,000. 250 to 300, there's 5.66 months of inventory, 98%. And there were 35 sales in there. 300 to 400, there is 6.1 months of inventory with 98% list to ask price ratio. 400 to 500, 10.97 months of inventory. So kind of rough out there. 98% of asking though. And then 500 to a million, 7.3 months of inventory, 98% again. And then over a million, there are 43 active. 0 sales this week, 0 sales last week. So I can't tell you how many months of inventory and everything that there are, and it's always skewed. So you really got to look at a month. Like there's probably 1 to 2 that sell a month in that million plus. I mean, I've seen 2 sales 1 week, I think in the last 10, and I've seen 1 probably about every other or every third week or something like that. So basically when it comes down to it, that it's not a big market, not a big segment in regards to what's going on and all of that kind of stuff. And if I gave you the months of inventory, it would look weird because none of them have sold this week. And so then when one does, it looks like, wow, that was really great and not that bad. But so basically, but when you're looking at that again, the list to ask price ratio, except for under the 250, they're all at 98%. So basically, when you're looking at that, that's even at 500,000, 98%, that's $10,000 is the most that people are going down and that the seller is accepting. So it does come down to, it's interesting to see when they sell, that they're selling at that price, but maybe it takes a few months for the seller to get to that point. And that's really unfortunate for the seller. It's unfortunate for the buyer and everything too. And it depends on what's going on with you. If you're living in it and you're not making a decision on where you're moving, or maybe you're missing out on a property that you wanted to get because you can't sell it or anything. So there's all kinds of different things that are, going on and all of that kind of good stuff when it comes to somebody purchasing a home and the market and all of that kind of stuff. So operating optimally within it, the best way to do it is to actually be as close as you can to market value, because that's when you're going to get the showings and that's when you're going to get the people in there. And even if you're a little bit below, I've noticed if you're below market value, what's going to happen is that people are going to come in and they're going to bid it up to market value. Because when you got all the eyeballs on it and somebody there is saying, hey, I like this house. And then you think, yeah, I like it too. And then it becomes a competition and you're like, okay, well, I'll pay more for it. No, I'll pay more for it. And so as a result of that, that's what happens and where the ball really gets rolling for people. And it takes it up to market value. And then they go and it gets to a point where they're like, it's too high for me. I'll let the other guy have it at that price, And so basically, It is market value, whatever that market value is the critical number when it comes for buyers or sellers. Again, buyers don't want to be looking at houses that they cannot afford because they fall in love with it, and then they go look at a house that's $100,000 less than that, and they're like, "Gosh, I'd really like to have that other house. It's $100,000 more." You don't have that 100,000 more in buying power. And so, you can't, you're not comparing apples to apples, and you've got some, you're just off in your thinking in regards to what you can do. And so that's really why I myself try to show you the houses that you can afford, or something that may, when you're looking at the comps of it, that it really should be selling for less. And then you've got an opportunity to, make a low offer on it, because that's what the market value is. So looking at it, you've got it. The market is what it is. None of us can change it. None of us has a crystal ball to let us know what's going on with it. So we do look at the trends. We do look at what we can see to make things happen, and all of that. But as a seller, I just strongly suggest that people sell it at market value. That's going to be your best bet. As a buyer, I suggest that you look at houses from a market value standpoint and know you're not going to be able to lowball them. But if you're in a situation where you need an offer and you need to sell your house now, we have several programs that can help you. We have several buyers that are out there that can buy them, many of them at market value. Again, that market value term, right? They're going to buy it at market value. Some of them are going to be a two-step process, which means they're going to give you the bulk of your money, get you out from under that loan right now, and then they're going to put it back on the market and they're going to sell it at market value. And there's a fee for that. It's usually like 6 or 7%. So there's a little bit on that. There's a lady that I'm working with right now. I'm trying to figure out what to do exactly with that, because she needs to sell. She's got some challenges that she needs the money for, but it's in a short-term rental program. It's in Reunion, and they're making good money on it, and they don't want to stop the rentals coming in because it's a good ROI. So these companies, they're not going to buy them at with that good ROI. It needs to be an investor that wants to hold it. So this is a completely decorated reunion home. It's under great management, that they've got a good ROI on it. And I could get you the numbers if you're interested in it. But so there are those kinds of situations that don't go along with some of these other programs that I've got. But I was just talking to one of the plan managers and everything this week, and basically what these companies are out there for doing, and what I'm out there doing, is that we just want to solve people's problems. So if you've got a problem, just bring it to me. I'll be happy to work through it with you, to let you know what your options are, maybe the best way to do it. So like I always say, I can't change the market, but I can operate optimally within it. And I do that every day. And that's what I love to do. So this has been a lot on the market this week. I hope it's been informative and all of that. Let me know if you want to. But in order to get in touch with us, you can call or text 407-566-2555. You can find us online at centralfloridarealestateradio.com. And we'll see you next week. Have a great one, everybody. Bye-bye.